Hello and welcome. You're watching First Stick here on News 9, where we bring to you the morning action on Dalal Street. I am Suyash Maheshwari, and with me in the studio, as always, is Amit Ranjan. And it's a Tuesday morning in the markets. They are under some bit of a pressure this morning. Nifty has opened slightly lower, but nothing concerning just yet. The index is still holding above that 22,400 mark, and the broader markets, they continue to move higher. In fact, they have been moving higher for the past 7-8 sessions or so. But I think there are enough reasons for us to be cautious right now, and I'll tell you why. One, Nifty is around that congestion zone of 22,500, and remember, this is the level from where it has reversed course 2-3 times in the past, and even on a couple of occasions the index has given up almost 200 points from this zone. So perhaps one needs to be mindful of that. Number two, the global cues are turning against us, and Amit, fill us in please on that.
Thank you, Suyash. Something that we spoke about yesterday, the strong US data has triggered a rethink on the Fed rate cuts.
Right.
Now this has basically had an effect in the Asian markets, which were the real performers yesterday. Hang Seng this morning is 2.51%, triggered by the strong manufacturing data that came out of China recently. Hong Kong has outperformed all the other Asian markets, and Xiaomi Corporation was the leader of the pack over there. US markets not so strong. Dow Jones closed in the red at 0.6%, S&P 500 closed in the red at 0.2%, Nasdaq slightly in the positive, in the green at 0.11%. Coming to the European markets, Stock 600 closed in the positive at 0.18%. Nikkei at par this morning at 0.00% right now, and Hang Seng is the biggest gainer in the Asian markets, 2.51%. Now, this is something that the pundits in India may want to take note of. After the China data that has come out, the buy India, sell China strategy amongst global equity firms may have reached an inflection point. And they may be going back to their old favorite, China, from India. Not something to worry about just yet, but it may be something that the pundits may want to take note of.
Of course, Amit, and it's a game of valuations, right? The money will flow wherever, the assets are cheaper, the investment, you can make more bang for your buck. And it looks like, China currently is, half as expensive as India. Our PE is currently at about 20 times our forward earnings, whereas China is trading at a PE of about 9.6. So perhaps that is playing out into an equation, and considering that there is a bit of a turnaround, and we also expect multiple stimulus packages from Chinese economy and the government as well. But one of the reasons I think why there is a bit of concern in the global markets, as you also pointed out, is the manufacturing data in the US that came in hotter than expected. PMI unexpectedly increased to 50.3 in March, expanding for the first time since September 2022. Now, you may wonder why this is bad news, because that plays out into this whole narrative of when Fed will cut interest rates, and given that the data is coming in hotter than expected, Fed may be in no rush to cut rates later down the year. And to add to that, this is also playing into the other factors. The bond yields, they have propped up by about 12 basis points. The dollar index has surged 0.5% or so. But among these three global cues, what I am looking at is the oil prices, which are up at a 5-month high.
Just to add to that, why the Fed may not now be in a rush is this is an election year, and inflation is something that will be most in the minds of whether it's the political corridors or the Fed.
Right.
So that may also delay the Fed. Maybe June may not happen.
All right. So far the dot plot suggests that there will be 3 rate cuts, although to Amit's point, there is a bit of a divergence in commentary that is coming out. Mr. Powell is sounding dovish, whereas other voting members, including Christopher Wallace, they are, of the opinion that it would be prudent to hold interest rates higher for longer. But, I was talking about oil prices. They have surged to a 5-month high as manufacturing activity in both China and US have expanded last month. In China, by the way, this was the first expansion in 6 months. In US, first in 1.5 years. And this of course plays out in favor of oil, because this of course would mean there will be higher demand for oil. Remember, China is world's largest crude importer and US is the biggest consumer. Also, the geopolitical tensions that we are seeing in the Middle East and the tighter supply in Mexico is playing a part in that. But coming back to our markets, slightly muted opening. Nifty is still hovering around that 22,450 odd levels or so. The broader markets, they are doing fairly well. But joining us in studio now is Mr. Brijesh, who will tell us what's the way forward for our markets, because there are multiple triggers and multiple reasons which suggest that the tide could flow either way, Amit. And Brijesh is here. Brijesh, thank you for joining us here on News 9. We were discussing where will the markets go from here on, because I'm looking at Nifty. Of course, the setup overall is looking bullish. The breadth is heavily in favor of the bulls, but we have formed multiple tops around that 22,500 level, and whenever we have gotten to those levels, we have seen a sharp reversal, and at least on two instances, Nifty has given up about 200 points from that zone. This time around, I mean, the setup is looking slightly different. We are in a rallying market for sure. I mean, is that enough to help us power through this congestion zone?
Okay. Good morning, Suresh. So there are multiple things which we need to observe. First, this rally has come post on the day of monthly expiry on Thursday. So that was the day when the levels of 22,200, where the huge short covering was short positions were there, that got unwinded, and there was a breakout about 22,200. And on the same day of the monthly expiry, FIS on the index future, which they were short over the last 2 months, have reduced their shorts. Almost they were short by close to 90,000 contract on the expiry day, and on the closing, they almost cover 60,000 contract, close 60 to 70,000 contract, and they are net as of now, as of yesterday, they are only 20,000 contract short on the index future. So FIS reducing their short position on the expiry day, Nifty moving about 22,200 mark, and the way the Bank Nifty triggered the breakout above 47,000 level. So I believe we are in a setup where at least for this week or maybe for the next week, we are going to trade with positive bias. As you said, the levels of 22,500 has been acting as a resistance, but I believe this level will be taken out. We would be heading somewhere close to 22,800 mark. This level is derived from the daily time frame, and if you look at the daily chart, there has been a rising channel kind of a pattern, and if you look, point out on the higher side, the levels do come at 22,800. So my sense is maybe this week or maybe during the end of next week, somewhere closer to this next couple of trading session, we should be heading at 22,800 on the higher side. On the way down from where the breakout came at 22,200, that is now going to act as a major support load, at least from the intra-week point of view. And directionally, I would be very cautious. I would be taking any negative bias or maybe a big correction or good amount of correction only when the 50-day moving average level is broken down. And the value for the 50-day moving average is somewhere close to 21,990. So almost 22,000 mark. So right now, if you ask me, the bias is positive. Heavyweights are not contributing the way it should be, but then I think mid-cap is the space where we are going to see good amount of momentum. And as long as 22,200 levels are held, I think there is always an opportunity and possibility that this 22,500 will be taken out. And this time it might not see resistance at those points, and probably 22,800 should be on cards, is what I believe.
Good morning, Brijesh. I wanted to talk about Hindustan Copper. Now, after the China data came out and there was a surge in metal prices, the Hindustan Copper was the largest gainer when it came to the metal stocks in India. 9% surge yesterday. China is the biggest producer and consumer of copper in the world. The other stocks also were not far behind, whether it's JSW, Tata Steel, even Adani Enterprises, which has a copper unit in its Mundra port region. Do you see this rally continuing for a long time, or is it just a blip?
I think this should continue because the way we have seen a breakout like this at level of 300, there was a lot of call writing, and the way these call writers have exited their short position, and there has been a very strong formation towards the 350 mark. So I strongly believe this would be the peak for the entire month. Whenever it comes back to 300, maybe on a slip, if it slips to 295 level or 298 zone, I think it's a beautiful buying opportunity. I won't be surprised if I see some 40, 50 points or more during this entire expiry. Somebody who wants to take the directional view can also look to add 300 call option strike price whenever there is a correction. But definitely the way the weekly and monthly charts are now structured and the way the volume breakout has come in yesterday because of this entire story, I think this should play for the entire month, and I would be definitely looking for 340, 350 on the higher side. That should be the directional view for the month of April.
Right, that's for Hindustan Copper. But another stock we wanted to pick your brains on is Delta Corp. Now, the online gaming company has been in doldrums ever since Supreme Court slapped a 28% GST on the full value of the bet plays. The stock, I mean, last week hit a 3-year low. However, yesterday something very interesting happened, Brijesh. You know, we saw almost a 13% surge in Delta Corp stock, and the volumes were fairly strong. Now, I couldn't find any fundamental trigger for this strong surge. What's your sense of things? Is just bottom fishing going on here?
Suresh, it's too early to define whether this is a bottom fishing because if you look at the trend is weak, both from the weekly and monthly time frame. So definitely, I don't believe we can be betting for the long-term bets like bottom fishing and playing for the 7-8 months kind of a target. I don't see it right now. Definitely yesterday there was some buying because of which the stock has gained momentum, and I think I would more play with this in momentum trade, maybe with a very strict stop loss of yesterday's low, and I would trade for some trading bet. But bottom fishing and positional traders, positional point of trade, I would wait and watch. Maybe we are not recommending this stock on the long-term perspective. Maybe trading we can do, but then not a positional bet.
Positional bet. But Brijesh, what are your picks for our investors today?
So as I likely said, I have a sense that market might go to 22,800 mark, but then I also sense that this rally will be more with the banking stocks and Nifty may not be the outperformer. Slightly the mid caps is a space where I think we will see a good amount of percentage return. So the stock like Cochin Shipyard yesterday has seen a very good range breakout. So I think Cochin should be in a watch list. The stop loss should be 945 for the target of 1030. It's a good amount of upside, 6-7% kind of a gain can be seen Cochin Shipyard. LT Food is something which is again given a very strong breakout, volume breakout. It's from the lower level, it is reversing. It's a good amount of risk reward ratio is there. LT Food can be bought at current price with a stop loss of 192 for the target of 220 to 218 to 20 mark. Next is Sula Wynets. So this is again from the mid-cap space. I think it's beautifully structured. The move is pending. The trigger came in the last week. I still believe the current price is the perfect entry point. So Sula Wynat can be bought at current price with a stop loss of 545 for the target of 603. And lastly, again, the momentum play, the Dilip Bilcon DBL is again something which is very extremely positive on charts. I think one should take a good long traded current price with a stop loss of 445 for the target of 495 to 500 on the higher side. So more of the mid cap space, this rally should continue.
All right, Dilip Bilcon, Cochin Shipyard, Sula Vineyards on the radar of Brijesh Iyer for the short term. Sir, thank you for joining us here on News 9. Appreciate your thoughts and your time.
Thank you.
With that, let's slip into a short break. On the other side, Mohit Gang, co-founder and CEO of Moneyfront, joins us.
You were the chosen one to direct Mr. Bachchan for his first endorsement, for his first appearance on the small screen.
It was a life-changing moment.
Have you been a rebel with a cause?
There was a sense of responsibility, there was a sense of frustration.
Are you worried about cancel culture?
You tell a story with a fierce psychosis, you're gonna spoil it anyway.
This and more. Streaming on News 9 Plus. Subscribe and get free vouchers.
We are trying a lot of experiments, innovations and ideas.
We came out with a new format in audio, which is audio series.
Listening for content-oriented company in India, which is a very unique proposition.
When you look at audio in general, we had music, which is like extremely old format, and then we had podcast.
A natural extension to Pocket FM is to move from Hindi to regional content. I think I'd love to see their FY24 numbers, which they claim will be close to 1,000 crores. I think there are talks of them to raise another $80 to $100 million of funding.
This and more. Streaming on News 9 Plus. News is now content. Subscribe and get free vouchers.
Currently, the industry is facing a lot of challenges as far as demand is concerned. Basically, the US markets has slowed down because of high inflation.
So obviously, diamonds being a dream product, something which doesn't have a utility value or is seen as a luxury. So that obviously goes off your shopping list. That's the first item that will go off your shopping list, especially in recessionary trends.
That lab-grown diamonds are not mined and they do away with the entire mining. So they save up on all the environmental damage that is associated with mining and of course, the mining cost, which is why they're even more affordable.
People that is impacted by all these recessions are the artisans, are the people who work in this industry, right? But I think lab-grown diamond has allowed them to actually use their skills in the same product.
This and more, streaming on world's first news OTT, News 9 Plus. Download now.
For the very first time in our investigation, we unmasked the killer of Ravindra Matre.
In 5G, we have to stand with the world, and in 6G, we have to lead the world.
Winning a Grammy was an absolutely surreal experience.
How do you fulfill that promise? Because ultimately expectations have to be met. If you look at the political landscape, is it really changing for women? And what is the inability of the forces that dead bodies surface but not the living people?
Welcome back. You're watching First Stick here on News 9 and let's take a quick look at how the markets are doing this morning. At so of 10 a.m. this morning, the markets have in fact, the headliners, they are very close to their day's low. Although nothing to be concerned about. Nifty is still holding above that 22,400 levels and if you have been following us, we had said yesterday that would be a crucial support for the index, at least the first crucial support for the index, and below that we'll probably see in the index testing that 22,100 to 200 congestion zone from where it had reverse course multiple times in the past, but so far we are holding above 22,400 levels. But overall, the the momentum is slightly tilting towards the bears this morning. As you can see on your screen, we are very close to the intraday low for Nifty, and even Sensex that has slipped below the 74,000 mark. But the broader markets, they continue to do well. Both indices are up 0.5% this morning as well. And by the way, both mid-cap and the small-cap indices are on a 7-8 day winning run. Nifty mid-cap, for instance, has recaptured 49,000 mark. This is for the first time since early March, and the small-cap index is also moving towards that 16,000 levels. We are just about 150, 160 points shy of it. And volatility, even though it's up 0.5% this morning, we are knocking at 12 levels, which again is a low for India VIX in multiple months. But what happens next, and to get his views on the market. Let's welcome Mohit Gang, co-founder and CEO of Moneyfront. Thank you for joining us here on News 9, Mohit. And I mean, the overall setup as far as India is concerned, it's looking positive. Domestic cues, I mean, the data that's coming out, it's phenomenal. The GDP data, the PMI data, inflation data, whatever. But from a global perspective, we are kind of in that inflection point. I mean, oil prices, they are at a 5-month high. The bond yields, they are back at 4.3% levels, and the dollar index has clawed back above 105 mark. How much of that is a threat to the bull run that we are currently on?
Sorry, good morning. My bad. I was on mute. Look, honestly, I think, Suresh, there are mixed indications from the US data which has come out. The PMI data came out very strong, honestly, and the market wasn't anticipating that. Market was rather expecting a weaker data, which kind of lends credibility to the expectation of a rate cut. But a stronger PMI data dents the market's hope that a rate cut is coming soon, and hence the shoot up in bond yields. And that's not just the 10-year bond yield in US. Across the spectrum, which is the 2-year, 5-year, 10-year, 30-year, all the bond yields shot up by almost 12 to 15 odd bips. And even the dollar index shot past 105. And both of these are not great signs per se for global markets and specifically for Indian markets, right? But my sense is, I think the subcomponents of PMI data honestly are a little more favorable, and I would expect the bond yields in US to ease off from these levels. The commentary from Powell was kind of dovish, and I think there are mixed signals. As I said, market is not exactly able to gauge the magnitude and the when exactly to anticipate the rate cuts. But my sense is we will have a rate cut cycle starting pretty soon in US, and that should ease off the bond yields. If not very soon, my sense is in a reasonable time frame, we should see the bond yields easing off in US. Coming back to home, I think Indian markets are showing robust signs of recovery post that small correction in mid and small caps, which we saw last month. I think the bounce back in the market has been equally ferocious. And today, I think it's only a cool off day. People are just positioning their bets, and I think it's more as a consolidation kind of a thing. I think all the trends and all the indications in the domestic market continue to remain extremely bullish. We saw the GST data coming in yesterday, which was a shocker data again, and it's the second highest mop up ever. Right. So all the data points, as you rightly mentioned out, are very, very promising, and I continue to see bullish trends across the domestic market for the time being.
All right, and Mohit, it's kind of interesting, what's playing out in the US, because one would imagine that a better than expected manufacturing data would be good for the markets, but the markets reacted negatively. Basically, good news is bad news for the markets right now. And I mean, do you think we are playing, or we are paying a lot of attention to this day-to-day activity? Because it looks like Mr. Powell is pretty clear. I mean, the last 2 times he spoke, he sounds very dovish. He's pretty much sure that there will be 3 rate cuts down the road, at least in this calendar year. What's your outlook on this? Are we paying too much attention to everything that Mr. Powell or Mr. Das has to say?
Honestly, Suresh, I think even I found it very confounding that good news is taken as bad news, and sometimes bad news is taken as good news, just because market is too focused on the rate cut cycle and when is it starting. I would still go by what the Fed said in the last meeting, and I think my sense is we will see those 3 rate cuts coming, which the Fed chair indicated in the last Fed meet. I honestly don't see any big reason right now, just because of one PMI data. US economy continues to remain strong. US inflation data also continues to remain a little hot. But my sense is the Fed is anticipating all that and has kind of projected or taken everything into cognizance. So I would still stand by that 3 rate cut projection from the Fed, and honestly, there's no reason as of now to doubt that.
All right, and one final question from me before I hand it over to Amit. A popular strategy that emerged post-COVID was buy India and sell China among foreign institutional investors. I mean, the data that's coming out sees we are at somewhat of an inflection point over there, because China, again, India, we are, pretty much twice as expensive as China at current levels. India's PE is at about 20x of 12-month forward PE is 20x, whereas in China it's about 9.6. Do you see, because that perhaps playing out into foreign institutional inflows, because they only had started picking up or buying Indian equities just now?
Look, Suresh, honestly, I think there is no two doubts that Chinese market is looking extremely tempting and attracting from a pure valuation perspective. Look, an economy of the size of China, even if it grows at, let's say, it's grown 4.5% last financial year, and this year it's projected to grow at 4.1%. That's not a bad growth number for economy of that size and scale, right? And you cannot, for whatever reasons said and done, you cannot really take the Chinese economy lightly. No foreign institutional investor will do that. There could be some political reasons, the rift with US recently, and some geopolitical reasons, or just the close nature of Chinese economy, which kind of dents some hope for the FIIs, but just the valuation part is very, very attractive and very tempting. Honestly, I think Chinese economy hasn't quoted that cheap on valuations ever, but for 4 occasions. And in all those 4 occasions, Suyash, in a matter of 3 weeks to around 26 odd weeks, the Chinese economy bounced back by almost 50 odd percent, right? So data strongly suggests a very attractive Chinese economy. Having said which, India's story is growing robust. The economy is growing. The market is trying to latch up on the China plus one kind of narrative. And we are seeing some amount of traction on those grounds. We are seeing some manufacturing activity moving to India. The iPhone manufacturing, some bit of semiconductors. We are now trying some small components and chips here and there. Look, I think it will take India a while for the entire narrative to shift, but even a small drop moving to India will mean a lot of boost to the Indian economy. I don't think so the Chinese investors are moving lock, stock and barrel to India, but incremental flow to some extent, even if that moves to India, I think it will be a great story for India. But honestly said and done, from a foreign investor's perspective, China market looks extremely tempting.
Good morning, Mohit. Now, while the Indian markets were slightly muted yesterday, there was the Nifty PSU, which jumped almost 1%, and this was fired by the public sector unit banks. Whether it was SBI, Bank of Baroda, all of them rallied yesterday. Analysts believe probably because of the benign credit environment, the asset quality of these banks took a surge, and that is why the stocks rose. What is your take on that? And two, the big two, which have not rallied that much in the last 1 year, that is Bank of Baroda and SBI, do you think it is time for the investors to watch these two, because the others have given some over 100% gains? The table shows it. Is it time that these two big ones, Bank of Baroda and SBI, are the ones that the investors should be watching more than the others?
Perfect. Thank you so much, Amit. Honestly, I think that's one tempting question which everyone is trying to answer in the market. There is no two doubts that private banking sector looks extremely attractive as a pack, but even the PSU banks, honestly, gone are those days when we used to compare PSU banks on the quality of management, NPAs, and let's say some government intervention and those things. I think those all those worries have been assuaged to a very, very large extent. And I think there is no reason why a PSU bank today should quote at a huge discount as compared to a private sector peer, right? So even if today, even after that kind of a rally, if you look at PSU banks and check their trading multiples vis-a-vis the private sector peers, the PSU banks relatively are quoting almost 20% or 30% cheaper than the private sector banking peers on the valuation multiples, right? And with the kind of earnings which is projected for FY25 and FY26, I think most of these banks, the bigger names especially, will be quoting at 1.5 times book on a forward FY25, FY26 basis, right? Which is a very, very tempting multiple. And I don't think so these banks should be now discounted by that big a factor just given the management quality. Even the management quality has dramatically improved, the NPS story has improved, and the margins are obviously ever improving, right? In the pack, obviously SBI and Bank of Baroda are the largest names in the space and remain the most attractive to me, honestly. I think on the valuation perspective, and even if looking at the performance, these two are the ones which are yet to catch up. My sense is, I think these are great bets for patient investors. If you have patience of 2 to 3 years, I think these will be extremely rewarding stories. Bank of Baroda to some extent has been dented by some digital things which RBI has pointed out time and again. Their app was closed on onboarding new clients and so on and so forth. I think that's one of the reasons why the bank hasn't done as well as other peers. But to my mind, I think SBI and Bank of Baroda are two banks to watch out for next 2 years kind of story.
All right, SBI and Bank of Baroda, the two banks to watch out for. That's the word coming in from Mohit Gang. Sir, appreciate your time and your thoughts. Thank you for joining us here on News9.
Thank you.
And before we wrap things up, let's look at how the markets are doing, because they are pretty much holding above the 22,400 levels, and that is for Nifty. Remember, Sensex has slipped below the 74,000 mark, but you know, we are not seeing a major correction just as of yet. The mid caps and the small caps, they continue to do well. Remember, they are on a 8-day winning run. Both indices are on a 8-day winning run. Nifty mid cap 100 is up over 0.5% this morning. It has recaptured 49,000 levels, and the small cap index is up almost 0.5% as well, and it's moving towards the 15,900 levels. We are just about 60 points shy of that, and volatility that has declined, and you know, as of 10:15 a.m. India VIX has in fact slipped below 12 levels, and we have not seen these levels in a few months from now. And it is kind of interesting considering that we are in an event heavy week. Later this month, the March sales data, March data for you know, the US will come out, and jobs data, and in US we have the PMI numbers, in India we have the PMI numbers. Lots of macroeconomic data releases will you know, start this year and in this week, and next week we will you know, kickstart the earnings season, the Q4 earnings season. Already the business updates of some of these banks and FMCG names have started trickling in. And speaking of bank, I mean, Nifty Bank will perhaps hold the key moving forward. I mean, in the last 5 out of the last 6 sessions, it has helped Nifty moved higher. In fact, you know, both PSU banks and the private sector banks are powering this up move. Look at HDFC Bank, it's on a 2-day winning run, has rallied by about 1% or so in both these sessions, and it's approaching that critical hurdle zones, you know, from where it had reversed course you know, a couple of times in the past. But 48,000 is what I'll be particularly tracking, because that has been a pain point for Bank Nifty in the past. We have reversed course multiple times from those levels. Will this be the time while we, you know, when we finally move past that and move to record high levels? That is yet to be seen, but keep an eye out on Bank Nifty, as 48,000 will be key on that. But on that note, let's wrap up this show. We'll see you at 4 on Last Tick, but up next is World Business Report.
$20,000 people dead and counting.